Tesla reported earnings yesterday. The stock is down about 2.5% as we speak, the day after. Our impressions of the call, I think there's probably four things that matter: two good things, two bad things. Um, let's start on the good side. I think they had, car sales are doing better because the second good thing is that FSD supervised is better, being used more, and also rolling out in other geographies in Asia and also in Europe. So that's good news. The bad news is that FSD unsupervised and Cybercab are being pushed out. Not necessarily pushed out like years, but it's just still it's the moving the goalpost further out, and at the same time we have capex coming. That to me is not a negative. The street seemed to react on the capex side. I'm okay with the capex. I think the company should be investing in the future. And I think compound interest, compound knowledge is iteration and doing new things. So that's fine, but you want to do that with the cash that you make of the existing business, and because the FSD unsupervised and Cybercab are being rolled out, or pushed out, the cash flow isn't coming, so there's discrepancy. That's why we have negative cash flow. This is not even on podcast. It's April 23rd, 2026. This is Grimdelco for the year. We're down 12%. The market's up 3%. We're underperforming by 15%, and this underperformance is almost exclusively driven by Tesla. In fact, we made some money with NVIDIA this year, so Tesla is underperforming the market. And the reason Tesla is underperforming the market is for exactly the reasons I just mentioned, that we have a delay in unsupervised FSD and we have a delay in Cybercab deployment. That is the bulk of the value of the stock. Now, on the positive side, we do have better than expected car sales this year. I think we can expect growth this year. This transpired in the call, and that's driven by the higher oil price and by FSD supervised being rolled out in more geographies. I think let me start with the positive side of things. I think there's definitely a pivotal point in the history of Tesla, and that is that for the first time, the actual software revenue, software itself, is materially changing the car business. So far, it has always sort of enthusiast, nice to have kind of thing, where we all, Tesla shareholders and Tesla enthusiasts, we use all these new technologies and gadgets, and we're happy with them, and then we're scratching our heads that most of other people aren't seeing that. So the iPhone moment in that sense hasn't happened, and I think now it's happening that people are actually buying Teslas because there really is a better experience, particularly because of FSD supervised. Now, in order for the stock to move substantially higher from here, we need unsupervised and Cybercab. Let me explain what I mean with that. So FSD unsupervised is a technology which allows the car to drive itself without a driver, and it's meant for customers. So that is not a Cybercab business, robotaxi business, transportation as a service business. It's simply a consumer business where you have intelligence on top of a car. So you buy intelligence for a car, and like the CFO said, we're changing our sales strategy now, where FSD is the product and the car is the delivery. So in that sense, unsupervised is a huge product that you can imagine can generate massive amounts of revenue and margins, because it's a software product that is delivered through the cars. So we have maybe kind of like a Gillette model here, where we sell the cars at a decent profit, but then we make a lot more money on top of that with FSD unsupervised. The reason FSD unsupervised is very interesting is because it's really a massive value creation for the customer. Think about a customer who is driving a car, basically driven by a car without paying attention. You can sleep, you can check your phone, and eventually, at some point, and that is the next level of FSD unsupervised, you could also send the car away to pick up somebody without even being in the car. Now, that's the next level. I assume that's not going to happen immediately because the regulators will first require um, that you still have to be in the car in case something happens, things along those lines. So, having said that, that is being pushed out. So, the company was very hesitant to give deadlines, maybe by the third quarter, fourth quarter. This is not something that is being pushed out now at scale. And to be fair to Tesla, they've never really announced these kinds of things, like sort of, oh, tomorrow's deadline that we're going to have 1 million FSD supervised or unsupervised. I think they always do this kind of gradually they kind of drop it into the market because they want to be cautious. They want to have data and learn from data and iterate through that. They don't want to list one shot and then recall and things like that, which makes a lot of sense. So the strategy, even though they might be planning maybe to launch FSD unsupervised sooner and maybe at bigger scale than they say, they might not say it. That's my point. But nevertheless, I think this being pushed out is certainly weighing on the stock because that is a clear competitive advantage that Tesla would have, and therefore there's good expectations for Tesla to generate the kind of cash necessary to fund the future. The second thing is, of course, Cybercab, which is the big business that we've all been waiting for years now. Cybercab is a business where fully autonomous car, a two-seater Cybercab specially designed for that particular purpose, is picking up people, driving people around like a cab, and does that at much lower cost than competition at scale everywhere in the U.S. and eventually around the world. That is a business that we expect should generate the bulk of the cash flow of the company in the coming years, and also it reflects the bulk of the value of the company today, discounted back. So that's what's being pushed out, and that's why the stock is not doing better. The stock is kind of in limbo. It's not going up, it's not going down, because like I said in the prelude, we also have the positive side of things, which is that FSD supervised is now finally kicking in and actually delivering better sales and better demand, more usage, lower churn. So all these metrics that you want in a subscriber business, in a software subscriber business, all these metrics are actually being met. They're observable, and that's a huge positive for the company, because that is also switching, of course, the perception of the company away from hardware towards software. Now it's not software like software as a service, God forbid, because that's not a good business to be in. It is a unique business in that sense. It's real world AI, so it requires hardware, and then it has a software component on top of it. So it's kind of like maybe the best, the closest example would be Apple, but Apple doesn't have intelligence. So this is definitely a new type of business that we've never seen before, where we have hardware, software, and intelligence in one product, and that's what you're really buying. You're buying the intelligence through the hardware. When I mean with software as opposed to AI, it's just simply software being, the app, the operating system, the whole metrics, the telemetry that is surrounding the car, that has advantages for the customer, but also for the company. Those kinds of things are useful and valuable. But of course, the biggest value comes from the actual AI, which is the car driving itself around. So this is where we stand. I think we're pretty frustrated as shareholders because we haven't been able to make money for the last 5 years with this stock. There's also a perception that Elon Musk is more obsessed now with other things like SpaceX and Terrafab, and that he's kind of dropping the ball on Tesla. I don't think that's a fair assumption. I think he's just, they're not able as a company to push faster on those vectors that really drive the valuation, which is again also the last FSD and Cybercab. Semi is coming. It's a bit delayed, but it's coming, and I think that's an interesting business that we should be focusing on as shareholders. Energy is also there. They expect growth this year, which is good. I think that's a good thing. Although I have to say we did expect a little bit more growth in energy, maybe than the Luminous said higher this year than last year. given where all the other energy stocks are. I mean, if you look around, whether it's uh, you know Siemens Energy or GE Vernova, the gas turbine manufacturers, whether it's companies like Plug Power, even QuantumScape now has supposedly an energy business, an energy component in their business, meaning they're not just selling to automotive. So there's a lot of growth in the energy infrastructure space, and yeah, we're not seeing that really in the Tesla energy business. They are talking about margin pressure coming from China, so there's a bit of negative there. But overall, I think we're still very, there's still enough positives on the energy business to be excited about it. I would just say there's a bit of dampening growth prospect. I mean, we would expect this business to grow 50%. Instead, they're saying just more this year than last year. That sounds like maybe low double-digit growth or something like that. They are expanding in Shanghai and Houston, so there's definitely growth there. And I would say we would take this business with a grain of salt. It's not as exciting as it should be given the demand for energy. When I say demand for energy, I mean like the infrastructure build out for data centers, right? Which requires energy harvesting, energy storage, transmission, the whole infrastructure build out for data centers, of which batteries are a big component because they help bridge the renewable intermittency, and also they help stabilize the grid. So to summarize, the Tesla earnings fall was disappointing to us because we expected a little bit more enthusiasm about the two main drivers of the stock, which is Cybercab and the unsupervised FSD. On the positive side, we have better car demand, growth in energy, and also FSD supervised traction showing in demand, showing in sales, showing in it's translating into better demand and better margins. By the way, I forgot to mention higher gross margins, which were driven by several factors. One of them was more FSD supervised realized sales, but there were all other factors too, so we don't want to over-index on that. So I think as shareholders, we're sort of at a crossroads here where we have to make a decision whether we want to stay with this company and wait for this surge in the stock, the forcing function that drives the stock into the 600-700s, or whether we want to reduce our position or even get out, because it seems that maybe Musk has dropped the ball here. That's the big question we have to answer. We're not ready to answer that question right now, but I think it's worth asking the question. You can also see in the Tesla community there's a bit of a fatigue. People are not really talking about the current business. They're talking about Terrafab. They're talking about things like merger with SpaceX, which are all excuses to hold on to the stock. That's not a good sign. What you want is a company which is delivering against its own business right now, against its strategy, delivering cash flow, and then has future plans and investments, and all of that is fine. But you need to generate enough cash. I guess the bottom line is, if this company wants to spend 25 billion in capex this year, they should be generating more than 25 billion operating cash flow, and they're not generating that much operating cash flow because the businesses that are supposed to do that, which is Cybercab and also FSD, are the main drivers to drive the company to that kind of operating cash flows, are not in place yet, and therefore there is a discrepancy, and that is something that Tesla shareholders are not happy about. Thank you.